Hi, it's Adam Hewson. I'm coming to you as always from the digital studios of Market Club, but actually what we're looking at right now is something kind of interesting. We're looking at our blog. If you don't go to our blog, you want to read what we're saying here. We said we actually published this on a Sunday and Monday, and as you can see, today we've had a big move down in the Dow. So let's take a look at the chart and see what we have to say there. So let's stay tuned. Hi, it's Adam Hewson coming to you from the digital studios of Market Club, and this is what we looked at in the Dow. We pointed out this important level here last week, 61.8% Fibonacci number. Now, people sort of poo-hooed me on saying, well, it's not that important, but the reality is these markets are important and these numbers are important. Today's breakdown came from a very important area in Fibonacci terms. And the question is, how far are we going to go down now? Again, so the move from this level to this level, so if you look from here to here to here, is 61.8% retracement. Very important. I'm going to scope this in a little closer so you can get a better idea of what we're talking about. So we'll take this in. Just simple to do this with our plus signs. And I'm going to put in our weekly triangles. Now here you can see we're plus or minus a 70, but our long-term indicator is still bullish on the market. But we got in here at this level. Oop, let me take that off because I don't want to show you the Fibonacci. Let me just take that off. Okay, we got in this level at 10,314.84, and we had to pull the trigger here, not to go short, just to get out at 10,947. That was a gain of over 630 Dow points, and as you can see, it's proven to be pretty successful so far. We're out of the market, and we're not going to mess around trying to pick a bottom in this market yet, because there's some potential downside that we see in this market. Again, this is our entry point, and this is our exit point. And you can see the numbers here, 11,016. That's a daily one. We don't pay that much attention to this one. These are the two keys. And right now you've got long-term up, and this one means get out, because the trend is up but the counter trend is down. We do not want to be in this market at the moment. We can see a pullback potentially, and let me just show you where we're looking for in those levels on the Dow. So again, here we go. I'm going to put our Fibonacci numbers on here. I'm going to go from the highs here, drag this down to the lows, and you can see right now where we're looking at in terms of Fibonacci terms. We could potentially see the Dow come all the way down to 10,378. A 50% correction would be 10,547. So these are levels potentially that can go to without we may have two-way action, but certainly the market is on the defensive. There's more uncertainties now, and there's no big stimulus packages coming in. We've shut our stuff on that. There is no plan B here. So the question is, the market's really going to do what it should be doing all the time, and it's finding a real level. So negative divergence here, which means new highs and here prices, and momentum going down. This is not a good sign. This is an MACD indicator, and we've talked about this in our movies before, and it is right now negative. So looking for the market to be on the defensive. This is Adam Hewson for Market Club. Keep your powder dry, watch the markets, and watch those triangles. They do pay off.